earnings per share, earnings per share, earnings per share, earnings per share. Is there anybody who has a problem with this topic? Is there anybody who has a problem with this topic? Anybody who has a problem with this topic? Anybody who has a problem with this topic, especially the diluted EPS? Is there anybody who has a problem? A problem? Anybody, or are we okay? All of us will skip it. Are we okay? All of us will skip it. I can see yeses there, then we will not skip it. Okay, and I would want us straight away to start with April 2022. April 2022, April 2022, April 2022, question 3C. April 2022, question number 3C. April 2022, question number 3C. Please, once you get it, could you kindly put your hands up? Once you get it, kindly put your thumbs up, thumbs up. Put your thumbs up once you get it. Right, thank you very much. So we are told there, R Limited, a publicly traded company, had 9 million ordinary shares of shillings 1 par value, and then 1 million, 7% redeemable preference shares of shillings 10 par value, each on 1st October 2020. So basically, they are giving us the capital structure there. The capital structure, basically the equity component, and they are talking about ordinary shares. Ordinary shares were 9 million, and each had a par value of 1. Par value of 1 per share. And then they had, in this case here, preference shares. In this case here were how many? They were preference shares, 1 million. 1 million. And each had a par value. Each had a par value of 10. Each had a par value of 10 like that. Great. So this is 1st October 2020. 1st October 2020. It's good to get your timings right. All right. So then we are told here, as at that date, R Limited had also had in issue 2.5 million stock options. As at this date, they still had what we call stock options. They had the stock options, 2.5 million. 2.5 million, stock options 2.5 million. And the average fair value per ordinary share the average fair value per ordinary share during the year ended 30th September 2021 was 2. Great. Great. So we are told here that R Limited's profit for the year ended 30th September 2021 from continuing operations was 14.575. And 30th September, that is last year, was 15.1 million. The following transactions took place during the year ended 30th September 2021. So we are told here, on 1st January 2021, the company had issued 1.8 million ordinary shares in a 1-for-5 rights issue at a price of 2, when the market price per share on CAM rights basis was 5. Okay. On 1st April 2021, R Limited also had in issue 1 million ordinary shares at their full market value. On 1st July 2021, the company issued a 5 million convertible bond with an effective interest rate of 12%. The bond is convertible into ordinary shares at the holder's option on the base of 60 shares per shillings 100 bond. None of the bond was converted during the year ended 30th September 2021. The income tax rate is 30%. So they want us to give them the basic earnings per share for the year ended 30th September 2021. For the year ended 30th September 2021. So these are very straightforward question, really. Hapa hakuna kitu. Straightforward question. It's a straightforward question, ladies and gentlemen. I'll be able to get all the marks here. So when we talk of 30th September 2021, 30th September 2021, 30th September 2021, we know that this year must have begun from 1st of October. So we have here 1st of October, now 2020. So this is the start and this is the end. Very important for you to mark your dates rightly. Start and the end. Of which, ladies and gentlemen, we know that for us to be able to get basic earnings, we normally take the profits attributable to ordinary shares all over one nose. Powers all over one nose. Profit attributable to ordinary shareholders all over weighted average number of shares powers over one nose. Now, ladies and gentlemen, fortunately, these guys have given us everything. In this year that they want us to calculate the basic earnings per share, they gave us the profits here. They've told us in the second paragraph, if you go to the second paragraph, as at that date, R Limited also had in issue 2.5 million stock options. No worries. These options are exercisable at 1.5 per share. The average fair value per ordinary share during the year ended 30th September 2021 was 2. This will not affect us in the basic EPS. Actually, should have been my third paragraph here. R Limited's profit for the year. Profit for the year is the PAT, profit after tax, to 30th September is 2021 from continuing operations. So in this case here, they have given us profit after tax 2021, ladies and gentlemen. In this case here, it is 14,575. We ask ourselves, we want to get powers, profit attributable to ordinary shareholders. After we get this part, we have got some other partners. These partners are here. So in this case here, come and less, we pay them first. So less in this case here, preference dividends. Remember, we stayed with these guys here from the beginning of the year. These preference shareholders, we had them from the beginning of the year. 1st October 2020, from the beginning of the year. So then they will be paid the whole year's preference dividends. And the dividends are quite easy to compute. It is 7% of, in this case here, what was the money that these guys had given us. Remember, it is 1 million, 7% preference shares. So in this case here, their shares are 1 million. And we know that the par value is 10. The par value is 10. So remember, preference dividends are normally a percentage, a coupon times the total par value. Remember the 1 million, those are preference shares. And then they have given us the par value, which is 10. So then 7% of this is 1 million, 10 million. Will give me how much in terms of thousands? Will give me how much? They're not talking to me at all. In terms of thousands, this will be 700, isn't it? Later on, I'll be picking a question where you have things like profit attributable to NCI. Remember, NCI is also another partner in our business. But that will come later. Here, we are only looking at a situation where we have only one partner who is our preference shareholder, and we're going to pay him 700. So the remaining amount will be going to ordinary shareholders. So in this case here, come and they give us the profit attributable to ordinary shareholders. Can somebody give me this amount? Profit attributable to ordinary shareholders. Can somebody give me this amount? Profit attributable to ordinary shareholders. It is 13,875. So it is 13,875. And this is so nice. 13,875. Now, ladies and gentlemen, I would have easily picked the number of shares that we had at the beginning of the year. Remember, the beginning of the year, we had ordinary shares, how many? 9 million. But you see, things happened in the year. Things happened in the year. So in this case here, because we can see some ordinary shares that were issued in the year, it will be very important for us to create a schedule that we call the ordinary shares schedule. So come and give us the ordinary. I hope you guys will be able to remember this figure. So because, ladies and gentlemen, we had ordinary shares increasing in the year, it will be very important for us to come and create a schedule here, which is known as ordinary shares schedule. You only do this schedule when we have got new issues in the year. And basically this schedule is the one that we shall use to get what we call the one-offs. Weighted average number of shares. And I told you how you should put this up. How do you put this up? You start with the date. We have in this case here description. Then, ladies and gentlemen, we have the total no's. Then, ladies and gentlemen, we have in this case here the time fraction. Then we have the bonus fraction. And then the last one here will be the one-offs now. So why are we doing this ordinary shares schedule? It's because they want us to give them the EPS at the end of the year, and yet, okay, fine, at the beginning of the year we had 9 million. But you see, in between here, things happened. We had new ordinary shares. So can I first of all get a thumbs up once you're able to copy this skeleton of this table? Once you're able to copy the skeleton of this table like that, can I get, in this case, ladies and gentlemen, a thumbs up? I can see in this case here from Beth, Joanna, thank you very much. So in this case here, we start by bringing down. Remember which year. It will be very important for you to mark the duration, the year that we are working on this, ladies and gentlemen. Remember, this is the year which is ending 30th September 2021. So tomorrow, kesho yake ni October 1st. So we are starting here from 1st October to 2020 to this one here, like that, to that one like that. All right. So this is the beginning of this schedule here. So in this case here, the first date is 1/10/2020. So in this case here, you give us balance brought down. And remember, we are only taking ordinary shares in this table. We don't bring any other shares. It's a schedule of ordinary shares. So is there anybody who is able to tell us exactly how many shares we will bring down at the beginning? We are told in this question, we are told on 1st October 2020, ordinary shares were how many? 9,000. Let's work with thousands. So in this case here, the balance brought down is 9,000 here. Don't forget, these are table for cumulative number of shares. So cumulative number of shares here are 9,000. They're 9,000 so far. So remember, you don't fill these columns at all at first. So take on the next date. When things happened, if you read the next paragraph, is talking about options, stock options. Next paragraph is talking about stock options. Of course, the stock options, ladies and gentlemen, will not fall here. The next paragraph is talking about profits. That cannot fall here. Go to the transactions that took place in the year ended 30th September 2021. And they are telling us, look at note number 1, on 1st January 2021. 1st January 2021, does it fall here? 1st January 2021, oh yes, I can see 2021 January will be here. So it falls here. So 1st January 2021. 1st January 2021, they are telling us that we did have a rights issue. So in this case here, we have a rights issue. The rights issue, why am I putting rights issue here? It's because we are going to have new ordinary shares. We are going to have new ordinary shares. Otherwise, I would not have brought it here if it's not about ordinary shares being issued in the year. So they're telling us on 1st January 2021, the company issued 1.8 million ordinary shares in a 1-for-5 issue at a price of 2, when the market price per share on calm rights basis was 5. So ladies and gentlemen, in this case here, if you're very keen, if you're very keen, you'll be able to see that we issued new shares here. We issued how many shares? We issued 1,800 shares. We issued 1,800 shares. I don't know why this examiner gave us this number. Otherwise, in this particular case, ladies and gentlemen, we normally take the shares outstanding, like this 9,000. We normally take the shares outstanding, like this 9,000, and then we multiply this with the rights fraction. In this case, the rights fraction is 1/5. Can somebody in this case here take that 9,000 times 1/5? Because they told us that the right was 1 for every 5 shares held. They've told us there it's 1 for 5 rights issue. 1 for 5 rights issue. So this is how they got the 1,800. 1,800. No examiner will ever give you this figure. So the interesting thing is that you guys now need to come and in this case here, add this here to get the cumulative, because this is a column of cumulative here. It's a column of cumulative. So then this gives us 10,800. This gives us 10,800. This gives us 10,800. 10,800. So don't fill these yet. Look for another date. Do we have any other date? Oh, yes. Look at note number 2. On 1st April 2021, this was a straightforward question because it's not a 2-year question. Because 1st April 2021 still falls here. 1st April 2021 falls here. So 1st April 2021. 1st April 2021. So 1st April 2021, ladies and gentlemen, how many shares are so? In this case here, we had a new issue, full market price. So new issue of how many shares here? New issue of 1,000, because I'm cutting the 3 zeros of 1,000. So then could you kindly aggregate this here? Could you kindly aggregate this here? Kindly aggregate this here. So when you take 10, because I want the cumulative, we are getting 11,800. 11,800. And then we go to the last note, of course, apart from the income tax on note number 4. The last note, on 1st July 2021, the company issued a 5 million convertible bond. I will not bring convertible bond here. Not unless you're told that they were converted. They were converted. I can just read the whole of it. They were converted to ordinary shares. I'm told on 1st July 2021, the company issued a 5 million convertible bond with an effective interest rate of 12%. The bond is convertible into ordinary shares at the holder's option on the basis of 60 shares per bond. None of the bond was converted during the year. So it cannot come here really. So this bond convertible basically will go to the concept of what your dilutive. Remember, dilutive EPS. So that is it. Hakuna any other note. The only thing now we need to do is to come and count the number of months in between. We count the number of months in between. And I would want us to count this together. I know I realized when I was trying to teach you guys yesterday, I know you guys are using a different approach. Using a different approach where you don't accumulate. You don't accumulate so they can talk of this has stayed with us for 12 months. Now, ladies and gentlemen, if you look at the dates in between, let's count. For myself, I normally go for this idea where I count dates in between. Like now from 1st October to 1st January 2021, how many months do we have there? So we have October, November, December. Don't count January. Don't count January. I don't trust ladies with the dates. Every time they count, they always get wrong. I don't know why. Very many ladies. Oh, today they are getting it right. They're 3 months. They're 3 months. They're 3 months. So these are 3 months. How about from here to here? From here to here. So you have to count the whole of January. So we have January, February, and March. Don't count April because April has just begun. 3 again. 3 again. So then this being the last transaction for the year, now we shall count all the months from here to the end of the year. Of course, it has to be the balancing figure. Remember, we have got 12 months in total. We have accounted for 3 here, so 6 gone. So then this tells me, without counting, that these are how many? 6. These are 6. These are 6. These are 6. These are 6. So then this is 3/12. 3/12. 6 over what year? 6/12. 6/12. 6/12. 6/12. So up to there, are we together really? Up to here, are we together? Up to here, are we together? Up to here, great. Of course, I know your method. Your method, you don't accumulate. Myself, I'm used to this method of accumulation so that I can get dates in between. I like my method because my method, I can do it without thinking. Wake me anytime, at whatever time of the night. Tell me, do an EPS question with this method. I'll do this entire question without thinking. I really fear thinking. I fear thinking. I don't like thinking. Unajua hata kufikiria pia inachokesha. Great. Now, who can advise me, ladies and gentlemen? Because of rights issue, we need what we call the theoretical X rights here. Theoretical X rights price. Because there is a rights issue, I need the theoretical X rights price. And to get this theoretical X rights price is very easy. They have told us in this case is 1 new for 5 old. So the only thing I need now are the prices. So this 1 new is going for how much? The rights. Just go to the second paragraph. Not second paragraph, but the rights one is not number 1. Not number 1. The company issued 1.8 million ordinary shares in a 1-for-5 rights issue at a price of 2. Of course, rights are normally new shares. Rights are normally new shares that you are giving to existing shareholders at a lower price, John says that I should, in this case here, adjust my board. Are you guys able to see my board very well? No, so long as you're able to see the board, you don't have to see me, Joanne. The board is the most important. The board is the most important, I suppose. Yeah, the board is the most important. I want to write here. So in this case here, 1 new. So in this case here, 1 new, the new one must always be at a lower price. And then the old one, ladies and gentlemen, the old shares are a bit expensive. They're a bit pricey. So the old shares in this case here are going for how much? 5. So then can you give me the total price now here? So 1 times 2, 2. 5 times 5, 25. If you add the 2, we are getting what? Somebody there? 27. Now this 27 is for how many shares? How many shares do we have now in total? This for 6 shares. And therefore the average becomes the TERP. The average becomes a TERP. So the average will be 27 over 6. The average will be 27 over 6. Now here we have to adjust the board a little bit. Joanne, you are right now. We have to adjust the board a little bit for you guys to see. So the TERP becomes their average, 27 over 6. Okay. So then this gives us what? Somebody here, 4 point what here? I'm being told it's 4.5. It's 4.5. I'm so sure, ladies and gentlemen, you guys have got other methods of doing this. They could be better. But for me, I told you, at times, like a Sunday like today, I fear to think a lot. So I would rather work with a method that I'm very comfortable with. But those of you who have a different method, are they getting the same term? Ah, great. Are they getting the same term? Nobody has tried with the other method there. Now, having gotten these, then could you kindly go ahead and give me the bonus fraction out of this? You know, we are giving some shares for free because of the reduced price. So come and give me the bonus fraction. So how do I get the bonus fraction? Great. You know, that is in terms of AFM. In AFR, actually, we prefer. In AFR, like now this EPS, they talk of come rights price is better. So bonus fraction, how do we get bonus fraction? It's market value all over the term. Right? So the market value is this old shares value. The bigger price in the equation. So it will be 5 all over the term, which is 4.5. 4.5 like that. So are we together up to there really? Are we together now? Great. Then come and fix this bonus fraction here. Remember, the bonus fractions are normally used, ladies and gentlemen, retrospectively. So if we have the rights issue here, you can't put the bonus fraction there. It is for the above dates. All the above dates retrospectively means backwards. So in this case here, we will come and put this 5 over 4.5 there. 5 over 4.5 there. 5 over 4.5 there. I know in your method, you don't weigh the bonus fractions. But for my method here, you are weighing everything to get 1/0. So how do we get 1/0? You take this, you multiply with the fractions. You multiply with the fractions, and then you give me the answers here. Multiply with the fractions. So like Wanjiro Getonga, she's giving me a figure of 2,500. 2,500. How about in this case here, this one here? How many are we getting, ladies and gentlemen? This one here. How many are we getting? How many shares do we have? 2,700. 2,700. And then lastly, for the new issue, how many do we have for the new issue now? How many do we have? 5,900. 5,900. So then kindly come and give me the total down here. Kindly come and give me the total down here. Give me the total down here. Give me the total down here. 11,100. 11,100. And now that you have gotten the 1/0, go ahead and give us our BEPS, our basic EPS 2021. So our basic EPS, it is the PAUs, profits attributable to ordinary shareholders. You guys gave me a figure of 13. If I remember very well, you gave me a figure of 13 something. The PAUs, you gave me a figure of 13,875. Thank you very much. 13,875 all over the 1/0, 11,100. So are you able to give me now this figure? Are you able to give me this figure? Wanjiro Getonga tells me 1.25. 1.25. 1.25. 1.25. 1.25. 1.25. So can I go now to part B? Can I go to part B of this question? Can I go to part B of this question? Can I go to part B of the question? Great. Thank you so much. So part 2, restated the EPS for the year ended 30th September 2020. Why do we do restatements? We normally restate. Why are we not subtracting 15,100 and 14,15? 15,100 is for last year. We can do like a table. We can do like a table, or we just go slow. Like now we have done for the one that we've just finished is for 2021. And then we come to number 2 where they want us to do 2020. And then we just finish like that. Or however, I agree with you. You can also do a table for the 2 years. You can do a table for the 2. There are many ways of killing a rat. Many ways of killing a rat. The very best, of course, is kicking it hard with your foot, isn't it? A stronger foot here. So now they want us to, so first of all, for 2020, which is last year, for 2020, come here and give me the PAUs for 2020, for 2020. So they have given me the basic earnings, which is PAT for 2020. Are you able to see the basic earnings for 2020? It's put there in brackets. It's 15 what here, somebody? 15,100, isn't it? So 15,100. Remember, even last year, we still had the preference shares. So even last year, the preference share capital is an old thing. So come on the less preference dividends, which in this case, you guys gave me 700 for you to be able to get our PAUs. So PAUs equals who? PAUs equals who? 15,100 minus 700, which will give us what figure? $14,400. Fortunately, in terms of this year ending 2020, nothing happened there really. There is nothing which happened in this particular year in terms of ordinary shares. So the ordinary shares that we began with, they told us actually there on 1st October 2020. On 1st October 2020. You see, 1st October 2020, listen here, 1st October 2020 is equal to 1st October 2020 is equal to 30th September 2020. 30th September 2020. Kuna mahali unajua hii ni mwisho wa hii mwaka. Sasa usiku. Hii inaanza sasa usiku. So hii ni sawa. Na unaambiwa hakuna adjustment because they have given us the number of shares in this particular period here. They were 9 million if you remember. They were 9 million if you remember. And therefore, our basic here, our basic earnings per share will be equal to, in this case here, the powers, 14,400. You divide this by what here? By the 9 million shares that we had there, which will give us a what figure? Somebody here, somebody is trying to follow. Somebody is trying to follow. What do we have there? I'm being given a figure of what here? Somebody, a figure of 1.6, a figure of 1.6, a figure of 1.6, a figure of 1.6, a figure of 1.6. This is it. But remember, because in 2021 we had a bonus issue, a bonus because of the rights, then we must restate. So you come and tell us here, restated 2020, restated 2020, this one here will be equal to 1.6 times the reciprocal of that bonus fraction, the reciprocal of the bonus fraction. Remember, reciprocal means that now you start with the term over MV. Reciprocal means you reciprocate. Do you remember? Let me just remember our bonus fraction. Our bonus fraction, ladies and gentlemen, was what over what? Our bonus fraction was 5 over 4.5, isn't it? So reciprocal, to reciprocate is to change denominator to become numerator. Reciprocal will be 4.5 over what here? Over 5. So then this is what you come and bring here. Basically, reciprocal, you reciprocate this. So this is what you bring here. So in this case here, times 4.5 over 5 like that, which will end up giving us what figures, and gentlemen, for those of us who are following? For those of us who are following, this will end up giving us how much here, somebody? The restated 1.44. Thank you very much. The restated is 1.44 like that. And then if you allow me, I'll be able to go to Roman 3. Roman 3, in this case here, we have diluted EPS. Diluted EPS. Diluted EPS. So diluted EPS. So in this case here, you look for the potential dilutive instruments, those ones that will decrease the EPS. Any instrument that you have which will lead to EPS reducing, then it's a potential dilutive instrument. In this case here, there are only two. Which ones are these? We start with the options. Remember, options, you will give options to employees who have been with you, senior level employees who have been with you, to give them shares for free or at a reduced what your price? Reduced price, right? For free or at a reduced price. The thing is, when you give them number of ordinary shares, a good number of ordinary shares, it means automatically the EPS will reduce. Why will the EPS reduce? The EPS will reduce, ladies and gentlemen, because of this. We know that EPS equals who? EPS equals who? It is equal to powers over what here, somebody? Over number of ordinary shares. Talk of one-offs. So when you give these people shares, assuming this was 10 and this was 40, if you give your employees 5 shares for free, your profit has not increased, but number of shares in this case here have increased, say to 45. You've given them 5 for free. Can somebody in this case here confirm that this is 0.25, this EPS? Then this one, of course, will reduce, will go down. Can somebody divide this? What is 10 over 45? What is 10 over 45? 0. What here, somebody? You can see in this case here that the EPS has been diluted. EPS has gone down. So all those things that are what here, like options, ladies and gentlemen, or any instrument that has the name convertible, you can convert to ordinary shares and increase the ordinary shares, then automatically that will be a potential dilutive instrument. So like in this question, for sure, we have in this case here what they are calling options. If you look at this particular word here, if you look at this particular paragraph number 2, are you able to see paragraph number 2 as at that date, beginning of 2020? R Limited had in issue 2.5 million stock options. These options are exercisable at 1.5 per share. The average fair value per share during the year is 2 bob. So then these guys, we shall be giving them a discount of how much? You know, it's a discount that gives rise to free shares. They're buying these at 1.5. and they're supposed to be going at 2 bob. So in this case, you can tell me what is the discount per share? 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 Now they are not talking to me at all. Discount per share, 0.5, isn't it? 0.5, you're right. So in this case here, then can you kindly go ahead and give me the bonus number of shares there? Bonus number of shares. So I hope you have written there stock options. Stock options are just options. I'm trying to identify the dilutive instruments. The dilutive instruments. Stock options. Stock options. So in this case here, they were 2,500 times the discount over market value of the shares. So in this case here, this will be 2,500. The discount, of course, you've told me I take 2 minus 1.5. All over this is the normal price, all over 2, all over 2. If I do it this way, then I will be able to get the free shares. So the increase in shares. I can call this one increase in shares. So the increase in shares, the increase in news, the increase in news. How many will they be? The increase in news, they're telling me the 625. Thank you very much. And in this case here, what will be the increase in earnings? Increase in earnings. We know that options, basically we're giving these guys shares for free, or rather for a reduced what year price. So in this case, it's not like convertible bonds where we shall save interest. Yeah, there is nothing you're saving here really. So in this case here, increase in earnings for options will always be what year? Will always be 0. Will always be 0. Will always be 0. Always 0. And therefore, in this case here, the increase in EPS, the possible increase in EPS. Remember, EPS is the earnings all over news. So in this case here, we have 0 over 625, which in this case here gives us what figure? Which in this case here gives us 0. Which gives us 0 like that. Now, ladies and gentlemen, what was our EPS in 2021? In 2021, what was our EPS in 2021? EPS in 2021. I know you calculated it. EPS in 2021, I know you calculated it. It was 1.25, isn't it? It was 1.25. So if these guys go ahead and exercise in 2021, then I expect this one here now not to be potential, but to be what here to be dilute. Why? Because the 0 increase in EPS is less than. This is less than. This is less than 1.25. Therefore, options are dilutive. Options are, now they're not potential. I've been able to do my calculations. Options are what here? They're dilutive here. They are dilutive. Options are dilutive. Options are dilutive. They're dilutive. When it's less, they're dilutive. If, for example, I got a figure like 2 here, which is more than the current one, I would have said that they're anti-dilutive. They're anti-dilutive. So I've been able to mark this down as a dilutive financial instrument. When I'll be doing my schedule of dilutive securities, this one will have to feature there. Now, do we have any other that has got the potential, ladies and gentlemen, of diluting? Yes. Convertible. We have what they're calling the convertible. We have what they're calling the convertible. We have in note number 3, the company issued 5 million convertible bonds. Yes, convertible bonds with an effective rate of interest of 12%. And remember that this instrument was issued at the middle of the year, somewhere there in between the year. So meaning that this instrument, you have to be careful with it because of the proration. Here we never did any proration because these stocks were available at the beginning. So we have this convertible bonds. So right number 2 there, this one here is a potential dilutive instrument. We have the convertible bonds. Convertible bonds. So then the date, because it was issued in between, the date is very important here. The date, ladies and gentlemen, the date here is 1st July 2021. 1st July 2021, like that. 1st July 2021. Okay, so please tell Eric which question are we doing? It's April 2022, question 3C. April 2022, question number 3C. So in this case here, 1st July 2021, up to the end of the year now, up to the end of our year is 30th. Our year is 30th September 2021. How many months do we have there? Can somebody do the counting? How many months do we have there? From the time when we issued this to the end of the year. This is end of the year, end date. Is there somebody? These ladies told me that they know how to count. They told me that they know how to count these dates. They know how to count these dates. They know how to count these dates. Great. Thank you so much. They're 3 months. Yes, they're 3 months. They're 3 months because you're counting the whole of July, the whole of what year, August, and the whole of what year, somebody, September. Those are 3 months. You guys are bright. Now, ladies and gentlemen, should these guys in this case here decide to convert, then in this case here, what will be the interest saved? The interest saved. So please give me the total interest. Remember, the interest rate is 7%, if I'm not wrong. The interest rate is 7%. No, it's 12%. The interest rate is 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 12%. 12% is for a whole year. And how much are they worth in total? Those shares, or rather bonds, ladies and gentlemen, are worth Kenya shillings 5 million. Are worth Kenya shillings 5 million. They are worth Kenya shillings 5 million. So this is an annual interest. These are annual interest. Should they decide to convert by the end of the year, the very best I will do is to save interest of 3 months alone. Interest of 3 months alone. Interest of 3 months alone. All right. And then now, ladies and gentlemen, remember that interest, we are supposed to be paying what your tax, or rather not be paying. We are supposed to be getting a tax allowance. A tax allowance. If we save this, then we shall be able to lose that benefit. If it's interest, you must always multiply this with what year? With 1 minus tax. If it's interest, we must always multiply this with 1 minus tax. And tax has been given as 0.3. Tax has been given as 0.3. Can somebody give me this answer here? Can somebody give me this answer here? Somebody. Can somebody give me this answer here? They're giving me a figure of what here? 105. They're giving me a figure of 105. Now, what if this was a convertible preference share? If it was convertible preference share, would have we multiplied this with 0.7? No, because preference dividends are never allowed for tax purposes. They are never allowed for tax purposes. Interest is tax allowable. Because of that tax allowance, that is why we are multiplying it with after tax. That is 0.7 like that. Now, ladies and gentlemen, let's also now investigate, because it's 2 sides of the coin. We are going to benefit if they convert today. If they convert today, we shall be able to save this interest. So our earnings will increase. This is the increase in earnings. This is the increase in earnings. Our earnings will increase. And then, of course, we expect in this case here, unfortunately, the bad side now, the bad side of the coin is that the nose will increase. So increase in nose. Increase in nose. So the nose, remember, they have given us the way of exchanging. They have given us the way of exchanging. They have told us the bond is convertible into ordinary shares at the holder's option on the basis of 60 shares per 100 bond. So it is 60 shares per 100 bond. And our bond value in total is 5 million. Our bond value in total is 5 million. Times there is something that so many students in this case here forget. Remember, it is 60 over the total over the bond, right? 60 over the 100 bond times there is something that so many guys here will forget. There is something that so many guys will forget. Is there anybody who is able to remind us what they think? The time factor. Thank you, Stella. Because if you use 3 over 12, for sure, you must also use 3 over 12 here. So then can you kindly give me this figure? Can you kindly give me this figure? Can you kindly give me this figure? All right, 750. So in this case here then, ladies and gentlemen, what will be the increase in our EPS? Increase in EPS. This thing will increase our EPS to what extent? Remember, it is increase in earnings, 105 over increase in number of shares, 750. which gives me how much? 105 over 750 gives me how much? 0.14. What comment do I make? What comment do I make to be able to demonstrate broad and deep understanding of the subject? What comment do I make? Remember, you are the ones who told me that the current EPS is 1.25. The current EPS is 1.25. And this is less than 1.25. So it means that this is dilutive. This is dilutive. The lower it is, the more dilutive it is. The lower it is, the more dilutive it is, yes. So because we had only two instruments, which one do you think is more dilutive than the other? Because we must rank. We must rank. The lower this is, the more dilutive. So if I remember very well, the stock options I have zero actually, I have nothing to contribute. So stocks will be ranked number 1 here where you have stocks. This one here for stocks here. Rank 1, stocks, rank 1. This automatically now will become what here? Rank 2, rank 2, rank 2, rank 2, rank 2. So lastly, now ladies and gentlemen, you need to come and give us, the dilutive EPS schedule. Dilutive EPS schedule. Give us the dilutive EPS schedule. Give us the dilutive EPS schedule 2021. The dilutive EPS schedule 2021. Very easy indeed. So what do we do here? Very easy. So ladies and gentlemen, what we shall do here is to come right away, and have a column here where we capture our earnings. Where we capture, in this case here, our one-offs, where we capture our one-offs, and the EPS. Very easy. So we start with the current state. So current state at the end of 2021, what figures do we have? If I remember the earnings in 2021, the earnings here were 13 something. They must have forgotten this, 13,875. And the one else in this case here was 11,100. And the EPS, ladies and gentlemen, is was it 1.25? I don't know. EPS, was it 1.25? Aha, great. And then now you bring in the dilutive securities, starting with the most dilutive, the one that you rank number 1. So the first dilutive, in this case here, are the stock options. So stock options, what are the earnings they are bringing on the table? Nothing. Useless things. Of course, there is it has some importance, but not here. Earning is 0, but they're giving us new shares. Is there somebody who is able to give us the new shares here? New shares coming from stock options. 625. And then I'll come and give us the total then. So this gives me 13,875. This one will give me what figure? Somebody 11,100 plus 625. Give me the totals. 11. I'm being given a figure of 11,725. 11,725. So please divide these two for you to be able to give me, divide these totals here, for you to give me a new EPS. Give me a new EPS. Is there somebody who is able to get 1.18? You can see now my general EPS is coming down. 1.18. And then come here. We have another dilutive instrument. This other dilutive instrument, ladies and gentlemen, is known as convertible bonds. Convertible bonds. So these convertible bonds, were they able to generate any earnings to us? Are they able to generate any earnings to us? Convertible bonds. Is there somebody who actually, if you look at this? So the convertible, these earnings are 105, and then the shares they are giving us, they are 750. Give us the total. So come here and give us the total. So the total, in this case here, somebody give me the answer here. the total. Somebody give me the answer here. 13,875 plus 105. Is there somebody who is able to give us this figure? Is there somebody who is able to give us this figure, this plus this? 13,980, 13,980, and then this plus this gives me what figure? 12,475, 12,475. Then you divide the two. When you divide the two, you should be able to give me the most diluted EPS. The most diluted EPS, which will give me what figure? Somebody here, 1.12. Thank you very much. And the very lowest becomes the diluted EPS 2021 equals 1.12. 1.12. I can see Irene has a question there. Irene, I'm sorry, that would really take me back. I would suggest, Irene, that you watch this video, because I think I've really tried to be very clear. You watch this video immediately after this. Should you have a problem, please reach out. Because I'm really time pressured. I can see you guys have another class at 2 p.m., right? And I would want to do like 2 or 3 questions. Is that okay with everybody? Is that okay with everybody? Including Irene. Irene, don't feel bad. Don't feel bad. Things are happening. Now, there is one old question that I would want to do here before I look at yours. A very old question, which can really give you problem. Susan says something different there. But they have tax, I don't know. This is December 2014, question number 3, boy. Question number 3, boy. The following information was obtained from the books of Panda Limited for the year ended 31st October 2014. I can see somebody doing like this. The thing is in the group. Revenues, etc. Look at additional information. The company has 100 million ordinary shares of shillings 10 each, fully paid, outstanding, and the 50 million, 8% cumulative preference shares of shillings 10 each, fully paid, outstanding, as at 1st November 2023. 2013, I mean. Each preference share is convertible into 2 ordinary shares before the year 2020. Further, there are 25 million share options outstanding as at 31st October 2014, which were originally issued on 1st November 2010. One share option entitles the holder to purchase 2 ordinary shares. 2 ordinary shares. 2 ordinary shares at 10 par value. The market value of the ordinary shares of the company as at 31st October 2014 was 15. The company also has a shillings 100 million, 15% convertible bonds of shillings 1 million, each outstanding. Each bond is convertible into 50 ordinary shares before the year 2020. The applicable tax rate is 30%. So they want us to give them the basic EPS. This is a good examiner, very good examiner, very good examiner, because he has even subtracted for me the preference dividends. He has given me the PAOs. If you're able to see the PAOs there, he has given me the PAOs. So remember, to get the basic EPS, you take the PAOs, in this case here, over 1/0, like that. So is there anybody who is able to see the PAOs? In this table given here, the PAOs is 200,000. What I'm able to see, the profit attributable to ordinary shareholders. Profit attributable to ordinary shareholders all over the number of ordinary shares outstanding. Number of ordinary shares outstanding. Are you able to see the number of ordinary shares we have? If you look at note number 1, the company has 100 million ordinary shares of shillings 10 each, fully paid, outstanding, whatever. There is nothing like new issue there, which will affect us. All right. And we'll need to do any weighting there. So simply, you will come and take this one, you divide by 100,000 number of ordinary shares outstanding, which will give us how much? Somebody here, 0 point, but not 0 point, but 2 per share, shillings 2 per share, like that. So number 1, done and dusted, shillings 2 per share. if you allow me, number 2, the number of the potential anti-dilutive ordinary shares. Because we should have asked here, number of potential dilutive, not anti-dilutive. Okay, so in this case here, dilutive financial instruments, dilutive financial instruments, you underline to scare the examiner. So we start with the first one. The first one, of course, we had somewhere there are the share options. Share options. So for share options, these are basically free marks. So in this case here, for share options, I will look at, of course, incremental. I will look at incremental. I will look at incremental EPS. So incremental EPS always for options is 0. Is always 0. And then I'll come and give them, in this case here, the incremental what here? Number of ordinary shares. Incremental no's or increase in no's. Incremental no's. So this is where I would want you guys to help me. Are you able to give me the incremental no's here? Please try your best. We see how you'll be able to take care of the discount. We see how you'll be able to take care of the discount. Let's see how you'll be able to take care of the discount there. Anybody who is able to give me this figure very fast? Fortunately, this is an instrument that I will not prorate at all because these options were given many years ago. Many years ago. You can see further, you know, we are in 2014. 2014 is the year of what year? Our financial report. And then they are telling us further there are 25 million share options outstanding as of 31st October 2014. 2014, which were originally issued on 1st November 2010. So these are very old options that we have. So we shall not think of like saying times 3 over 12. Iya wajapata woye. Hii sasa ukiangalia vizuri, the number of shares, the number, you know, the options are 25,000. Options are 25,000. Options are 25,000. But each will be giving them how many ordinary shares? 2 ordinary shares. 2 ordinary shares. So meaning that the shares which they are going to receive, part of it they're going to be given a discount. The shares are supposed to be 50,000. And then now times the discount over the market value. So in this case here, we have 50,000 times the discount. So are you able to see the discount here? Are you able to see the discount here? Discount for these options. Now they're not talking to me at all. You can see, ladies and gentlemen, the options are cheaper. They're being given at 10 instead of 15. So it will be 15 minus 10. All over the original price, the undiscounted price, which is 15. All over this one here, all over 15. So then you can be giving me in this case here the free or bonus shares. The bonus shares. The bonus shares. Is there somebody who is able to give me these bonus shares? Bonus shares. Bonus shares. Bonus shares. Sorry, I'm a bit fast, but we shall overcome. Bonus shares. Bonus shares are how many? Bonus shares are how many? Am I alone? We have some students really here. 16,667. 16,667. And therefore the incremental EPS, therefore the incremental EPS. The incremental EPS will be the earnings over what here somebody, I should have not said incremental EPS. This one here should have been incremental earnings. I'm sorry. Incremental earnings. So it will be incremental earnings of 0 over 16,667 like that, which will end up giving us what there? 0. 0. And then now we go to the next item, which is what here somebody, we have a convertible preference shares. Convertible preference shares. So we have convertible preference shares. Convertible preference shares. Of course, this is dilutive, always it will be dilutive, always, but unless you made losses. So give us there 8%, 8% convertible, 8% convertible preference shares. What do we have there, somebody? So they have told us there that we have some 8% cumulative preference shares, which fortunately, ladies and gentlemen, are old ones as well. 1st November 2013, a whole year. So I will not be able to prorate them. This is a good examiner. I'm not prorating this. So for 8% convertible, if they convert today, I will save dividends. Dividend saved. Dividend saved. Dividend saved. It will be 8%. Are you able to see how many of them they are? In total, ladies and gentlemen, it will be 8% of, it's 8% cumulative preference shares of 10 each, fully paid, outstanding, as at they are 50 million, 50,000 preference shares, and each is going for 10, a whole year. A whole year. I rubbed so fast. Oh, we shall overcome. Even Caro is really crying. Even Caro is crying. We shall overcome. We shall overcome. We shall overcome. When they convert, then I'll be able to save the entire dividend. And dividends are never tax allowable. So you can't bring there the issue of 1 minus tax. No. You got to bring 1 minus tax there. All right. All right. So in this case, I'm being given a figure of what here? A figure of 40,000. I'm being given a figure of 40,000. How about in this case here, increase? So this will be your increase in earnings. Increase in your earnings will be the 40,000. You save this. And then I will look at increase in number of shares. Increase in notes, the incremental notes. Are you able to give me the incremental notes then yourselves? Just try. Give me the incremental notes. Incremental notes is very easy to get. Incremental notes is very easy to get. Because they've told me each preference share is convertible into 2 ordinary shares before each preference share. So they have told us here, 1 preference share equals what here? 2 ordinary shares. 2 ordinary shares. And how many preference shares do we have? They have 50,000 preference shares. So then that will give me how many ordinary shares if they convert today. If they convert today, according to Sarah, the increase in those is 100,000. Is 100,000. Therefore, what is the incremental EPS? Now divide the 2. Divide the 2. Incremental EPS. Incremental EPS will be 40,000 over 100, which gives me 0.what here, which gives me 0.4. Automatically, this means that this one is dilutive. Is dilutive. Is dilutive. Is that okay? Is that okay? Please give me feedback. Give me feedback because I need to finish this question. I need to finish this question. Give me feedback. Are we together now? 0.4 is less than our, is less than our 2. Is less than our 2, is less than our 2, is less than our 2, is less than our 2. Great. Now, ladies and gentlemen, from there we have the last one. The last one now is the convertible bond. Can you try convertible bond yourself? We see. Try convertible bond yourself. We see. Try convertible bond yourself. We get to see the convertible bond. Remember that one? You have to adjust it for 1 minus tax. You must bring on board the 1 minus tax. You must bring on board the 1 minus tax. You must bring on board the 1 minus taxation. You must bring on board the 1 minus taxation. And then the other thing you're supposed to know is that even if you're not able to follow those tables, these workings normally have a mark. So for example, you may not be able to follow those tables how I'm doing them. But when you see options in an exam, you go and calculate new options or other new shares to be issued there. Right, incremental earnings is zero. If it is convertible, try to convert. You'll end up getting so many marks. That's what I've seen, because so many students don't do an EPS question. All right. So can I go to the last item? Can I go to the last item? I think today, amongst all the days, today I've really scared you. Which really, I'm very sorry. That was not my intention at all. That wasn't my intention at all. My intention is that I should be able to be nice to my students. I should be nice to my students, please. So can I go to the last one, please? And also remember, this is low hanging as well. When it's low hanging, it's not about perfection, even from your side. Because if I try to work with perfection, do you think we'll be able to do very many things, given the time that is left? For now, it's the marks that you are able to harvest. How do you harvest them? Very fast. So do I go to the last one, or do we continue staying here? Can I tackle the convertible bonds? I continue. Thank you so much. Yes. So convertible bonds. So convertible bonds, very easy. I love this. Things are happening. Convertible bonds. So convertible bonds, what do we have here? Number one, bonds are loan instruments. When they convert, I shall save interest. How much interest will I be able to save? Remember, the convertible bonds, they are given on note number 3. They are 15% loans. 15% loans. And the good thing, there is no time proration because they were issued long time ago, as you see there. So 15%, I can see out of shillings 100 million. So 100,000, because my figures are in thousands. All right. Multiplied by what here? 1 minus tax. 1 minus tax. So is there somebody who is able to give me this figure? What do we have here? 10,500. Is that okay? 10,500. So of course, this interest saved, the interest saved is my incremental earnings. Is my incremental earnings. This is my incremental earnings. How about incremental notes? How about incremental notes? Incremental number of ordinary shares. So the incremental number of ordinary shares, that is your normal. That is your normal. Because wameniambia, each bond is convertible into 50 ordinary shares. So 50 ordinary shares equals 1 bond. And then remember that 1 bond has got what par value? Our bond has got what par value? They have told us the par value is 1,000. So basically, we are saying that 50 ordinary shares that will be equal to 1,000 shillings here. And these guys have got how much in total? These guys have got how much in total? These guys have got 100,000 to give us. They've got 100,000 to give us. They've got 100,000 or 100 million to give us. 100 million. My figures are in thousands. So if you cross multiply, you'll be able to know how many ordinary shares that you're talking about. So this will be 50 times 100,000 over 1,000. So this will be how many shares, somebody? There will be 5,000, isn't it? So the incremental shares there will be 5,000. The incremental shares there will be 5,000, 5,000. So therefore, what is the increase in EPS? Increase in EPS. Increase in EPS, I'm taking the incremental earnings, 10,500, divide this by 5,000. Divide this by 5,000, which will give me what figure, somebody? 2.1. Are you seeing anything funny? 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 Remember, our current EPS was 2. This is non-dilutive, yes, or anti-dilutive, yes, or anti-dilutive, yes. So this is anti-dilutive, It is higher than, so not dilutive. Thank you very much. So from there, ladies and gentlemen, give me the diluted EPS schedule. Give me the diluted EPS schedule. Diluted EPS schedule, the diluted EPS schedule, where you shall basically come and give me the earnings here. We have one-offs here. We have, in this case here, EPS. We forgot to rank. We forgot to rank, but I think options is ranked number 1. From there, we have options number 1, of course, is the most dilutive. From there, we have convertible preference becomes number 2. And then 15% convertible bond. I won't even rank it because it's not dilute. It's not dilutive. It's not dilutive. All right. So then, ladies and gentlemen, come here very fast and they give me these figures. So we start with the current. We start with the current. So the current, are you able to see the current earnings really? The current earnings were 200,000. One-offs or number of shares were 100,000. This gave us 2 per share. This gave us 2 per share. And then now our ranked items, we start with options. Options earnings are 0. But you guys gave me shares to accompany options. You guys gave me shares to accompany options. How many shares were they? How many shares were they? 16,667. 16,667 like that. So please give me the total. Give me the total. Please 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 give me the total. So please give me the total. 200,000. This gives me 116,667. So please give me the EPS. Of course, I expect EPS to go down because options are dilutive. Options are dilutive. So you take this, you divide by this, which will give you what figure here. So divide, it will give us what figure, son? We are not talking to you. So it's dilutive, of course, 1.71. Thank you so much. From there, you've told me that the other dilutive thing that you're supposed to be talking about is the preference shares. So preference shares, are you able to give me, in this case here, the earnings associated with this, the increase in earnings? Somebody give me the figure, the increase in earnings for preference shares. So for preference shares, is there anybody who is able to remember this? For preference shares, 40,000. Thank you very much. How about the number of ordinary shares? No, number of ordinary shares for preference shares. For preference shares, they yield how many ordinary shares? How many ordinary shares? Were they 100,000? 100. Give us total. Don't divide. Give us total. Give us total. Give us total. Give us total. So then this plus this gives me 240,000. 240,000. This plus this will give me what figure, somebody? This plus this. $100 plus this, 216, 667. So you divide. Is there somebody who is able to give me this 2, or rather this figure here now? When you divide, is there somebody who is able to give us this figure, 240,000 divided by 216, 667? I can see things are happening. It's gone down, and this automatically becomes the diluted EPS. I don't need to do the other one that I did, get what here being anti-dilute. But if I try, if you bring, for example, you say, you talk of bonds, if you try bonds, so are you able to give me the earnings of the bonds? Is there somebody who can give me the earnings of the bonds? Was they 10,500? 10,500? 10,500? And then the shares were how many? The shares were 1,000, right? Or 5,000? 5,000, yes. 5,000. Please give me that. You will see this thing rising. So when you add this will be 250, 500, 250, 500. This will be 221, 221, 667. When you divide the two, good questions there. When you divide the two, what are we getting, somebody? 1.13. So you can see this is already now going up. It's already going up. So basically, it's called a turning point. So the turning point is normally the lowermost, which is this. You see, we're starting from 1.7 going down, and then we start going up because this is basically anti-dilutive. So this is very good for me. So this is the diluted EPS, diluted EPS, diluted EPS, diluted EPS, diluted EPS. Now, ladies and gentlemen, John is asking a very simple question there. You see, like now in note number 3, the company also has shillings 100 million, 15% convertible bonds, 15% convertible bonds of shillings 1,000 each outstanding. Each bond is convertible into 50 ordinary shares before the year 20. It depends on how the question is really framed. How has the question been framed? Because if you come and do 50 ordinary shares equals one bond, equals one bond. You see, you can't come here and say, what about shillings 100 million? Let me talk of shillings 100,000 because we're cutting 3 zeros. Shillings 100,000, you're cutting 3 zeros. You can't say that mathematically. You can't say that mathematically. Mathematically, that will not be correct. That will not be correct. Why? Because you see, these are number of bonds. So we're going to 2 ways of handling this. You can decide to calculate this in terms of bonds. This one here, you come and divide this by 1,000. Would you listen, how about 100 bonds? Then that will be very okay. I'm what you call 100 million Kenya shillings, and then you convert this to shillings as well. How do you convert this to shillings? By multiplying, in this case here, by what here, the power value, which is 1,000. So you can have here, this has always been like term, but really that's mathematics. You can think about this deeply later. So then I would suggest as follows that you guys create more time and look at these 2 questions that I've done deeply later on, and then I'll be able to do one intensive question on this diluted EPS. Is that okay? Is that a plan? Does that sound like a plan? Or it's hot air? It's a plan. Great. So please ensure you do that. And then if you allow me, I will be able to take you very fast to May 2021, question number 1. May 2021, question number 1. May 2021, question number 1. Now, are you able to tell me whether you have gotten the question? May 2021, question number 1. Now, I've changed gear to group consolidation. Group consolidation, but I still owe you 1 question of diluted EPS. Don't forget that we also have to do 1 question on reconstruction, yes. That will be done tomorrow early morning. Tomorrow early morning, we should be able to do a reconstruction question. So once you get these questions,